G'day everyone, welcome back to Pete's Investing. Today is March 28, 2023. This is the spot gold price update. First off, I just want to say that we did put this, first of all the timelines, the daily, 4 hourly and the hourly, if you're new to the channel, they're all in a positive movement in terms of the CCI. The only exception is the hourly chart is coming back and touching the moving average, so that's a potential break to the downside. If it breaks further down, we're going to see more decline in the prices as well. We did draw this ascending diagonal trend line yesterday. We did say be careful, it may break through that, and it did literally an hour or two after we posted the video, it broke to the downside. And you can see that more clearly on the hourly chart. So let me just go through each of these with expanded timeline. So first of all, we do trade with the CCI moving average direction. And generally we trade when the daily breaks to the upside. So you can see there on the daily, when it breaks to the upside, that's when we take the trade. You would have taken the trade there, and so on. And likewise, when the CCI is below its moving average and from there down, you would not be going long, you'd be only taking short positions only. We always trade at a higher time frame. So again, looking at the daily as our primary trend indicator, we look at the 4 hour and the hourly. So let me just drill down to those levels there, give it a bit more clarity. So for example, if you're going short at that point there, you can see there on the corresponding 4 hour chart, you would have gone short there, and there is no short, it doesn't go as far back on history on that one. But let's go back to this point here on the hourly, and that would have been, so you would have gone short at that point there. You can see there on the 4 hourly and the hourly, those shorting positions would have been more profitable. There was a small spike in the price there on the hourly and the 4 hourly, and you could have made some advancement there. So again, at that point there, you would have made some gains there as well. So again, ideally you want to see that break on the daily initially before taking that position in the smaller time frames. So what does it look like? That's our basic trading strategy using the CCI and the moving average. So what does that look like in terms of what we're looking at here in the shorter, in a close-up of that area? So here we've got the support line. That's a key support area. We want to see it maintain above that area in the coming days or weeks. On the daily, likewise, we've got a resistance area up here, and you'll notice here it's bounced off that almost twice, and it's come back down initially to the 38% almost in that first rebound, and then it's coming back down now just below the 23% rebound on the Fibonacci. If we look at the 4 hour chart in more detail, and again, we did draw this ascending trend line yesterday, and it did break below that. We did say be careful if you're going long to take your profits, or be prepared to not trade it if you're planning on going long. Again, we're only going long when it's above our moving average of the CCI. And again, on this time frame, it came down initially on a 38% level, and this second one has broken down through the 23%, and now also approaching the 38%. So I'll see how far this retracement goes before making any further decisions. On the hourly chart, using that same time frame, that's that point there, we did draw this Fibonacci extension, and that went as high as just below the 123% extension, and that's where our support resistance level is. And you see there, it's almost formed a double top. Now if that double top plays out, it's not quite a double top, but if it plays out, you'll see it come back down to around the 161% level if it does break out, or even the 200%. So again, notice also on the CCI, it's coming and resting on the moving average. So potentially I want to see it break and bounce off that level. And if it does that, then that's possibly another area you can possibly go long. And one other trading idea is when it breaks above the fractals, we take long positions, again, in the same direction of our larger time frame. So taking long positions only. So anywhere along here, you would have taken long positions, for example, there, potentially there, and so on. Now again, if it breaks above the fractals there, we may want to consider going long, but don't stress or panic if it breaks below that again. For example, here we potentially would have gone long. The price did rebound back, and what we do, we don't use stop losses, we use the average down approach. So even if it dropped down further, we wait until the next opportunity for a long positioning on the CCI, as well as a break above a new fractal, somewhere down here would have been. We would have gone long again had that happened. So again, to understand how to properly trade using the average down approach, reference the links in the description below. So at the moment, it's bouncing off that moving average, so potential further upside. Otherwise, if it breaks further to the downside, you'll see that in a little range there. It did break below the 78%, and that's a key indicator that it could actually weaken further. So I want to see how far it goes if it breaks any further to the downside. To understand how to properly trade, as I said, reference the links in the description below. Subscribe and like the channel. And if you really want to support us on Patreon, and we'll see you in the next video.